Good afternoon, everyone. My name is Judith Santiago in communications at the pension boards. I'm kind of sitting in for Travis Marks, who is on vacation this week. So welcome everyone to our Power Up Your Finances session on top financial actions for everyone. I just wanted to, a little bit of housekeeping. I posted on the chat two surveys that we're asking for you to please complete at the end of this session. One is EY's survey, and she'll go, and Sylvana will go over this, to text workshop PBUCC to a 609 phone number. And we've also developed a very brief 6-question survey. It'll take you 30 seconds to complete, to give you your feedback on this session as well. So we ask that you please fill this out at the end of the session. And I'll turn it over to Sylvana Santiago, who is our EY presenter this afternoon.
Thank you so much, Judith, and welcome everyone. Thank you all so much for taking the time today to attend this session. And for those of you that are watching this session later as a recording, welcome and thank you so much for participating and watching this session online. So my name is Sylvana Santiago. I am a certified financial planner with Ernst & Young. And today I'll be walking you all through some of the most important top financial actions you should consider addressing in your financial situation if you aren't already. However, first things first, we want to make it very clear to everyone that when it comes to your own financial planning, you're not alone. EY is here for you. And keep in mind that today's workshop is a part of a larger program of financial guidance that's being offered to you. So let's go over a little bit of that overview. So EY in general is a professional service firm that specializes in the areas of tax, auditing, and consulting. Now, the Employee Financial Services Group offers financial education to employees, and it's at absolutely no cost to you. So in your case, it is paid for by PBUCC. And it'll enable you to better understand your financial situation and help you just make informed decisions about your situation. Now, the thing is, when you reach out to us, we don't sell any financial products or hold any assets. So anything you decide to do is completely up to you, and we benefit absolutely zero with that, with anything that you decide to do. And if you look at the screen, you can see that there's 3 different methods that we have when you do want to reach out to us. The first is you can give us a call at 877-927-1047 between 9 a.m. Eastern to 8 p.m. Eastern, and you can speak with a live financial planner. And again, no sales, no cost, no worries. So you can call as often as you need to. You have a full range of services. They can include, asking a simple question because you heard about a topic that was of interest to you, or maybe even talking about your own specific situation and having more of a comprehensive financial discussion. For those of you that rather do some planning on your own, you have EY Navigate Digital. So the website is pbucc.eynavigate.com. You would need to register on there, but you have a big universe of all these different things that you can access, such as articles, calculators, tools, resources, just for your benefit. And you have the ability to chat with your planner as well on the website. So that's another bonus there too. You can set up an appointment. You have secure mailbox feature there. You can upload any documents. And if you have your smartphone, you can also download the app and do some planning on the go. Last but not least, you have EY Navigate Group Learning, which you are all taking a part of today. So welcome and thank you. And there is a new topic on a monthly basis typically. There's ways that you can replay different sessions if you weren't able to attend it live on the website. So feel free after this presentation to register on there and take a look and see what other topics may be of interest for you. And you also have short videos and things like that that you can also access if you're more of a visual learner. Now, the value in this presentation or any other financial seminar really comes from the information that you obtain and how you use the information after the session. So we hope to make this goal of taking action easy for you by the use of a personal action plan. So if you have a piece of paper and a pen or a notepad on your phone, I'd like you to start this today. The goal of the exercise is really to help you improve your finances, but do that one step at a time. So throughout these next 30 minutes, we have just sit back, relax, ask questions on the chat if you have any, but also write anything down that stands out that maybe you need to tackle after this presentation. The most important part of this presentation is probably at the end, maybe close to 3:45 when we're all wrapped up and your life begins again, because life happens. And sometimes, especially me, if I don't write anything down, I tend to forget what I need to do. And so it's important to just make sure that if you have anything, just jot it down, and I'll suggest some as well, some reminders for you. But this is just going to serve as a guide for you to help you commit to what you wanted to commit to over the next couple of days or weeks or even months. Now, financial planning is a very personalized plan. So there's no plan that's created equal. So the first thing I tend to talk to my clients about when I first chat with them is their goals. So I do have, let's talk about an example for now. I have a couple that I'm dealing with. Let's just call them Jane and Joe, just for the sake of this, and they're married. There's no kids involved. They only actually have fur babies, which is the same ones I have. But essentially what they reached out about was because they really didn't know where to start. And this is really common when someone is starting in the planning process. So the first thing I ask is to start thinking about their financial goals individually. As a person, what are your dreams? What did you have a time frame maybe that you had to accomplish these dreams? Have you thought about what you'd want to accomplish in the next 3 years, in the next 5 years? Maybe then go to dinner. Have that discussion together, especially because they're a couple. Planning together is so important, especially if you have a spouse or partner. And sometimes those goals that you have with one another might be a little bit of competing goals. So having that discussion and taking the time to talk through with it was really important for this particular couple and is important for financial planning. In this particular case, Jane wanted to be debt-free. And Joe wanted to start growing their family pretty much as soon as possible. And this in itself is pretty competing. So they needed to talk about what's a possible timeline for this? How can we refine our goals to make sure that we are both on the same page before we jump into something that maybe we're not ready for? So it really helps to set goals that are smart. So that's specific, measurable, actionable, realistic, and time-bound. And once you've settled on your own specific goals and you've written them down, go through them and try to prioritize them. Which one's more important for you? And everyone's is going to be different. Now, over the years, your goals might change. So you always have to be prepared to update them, especially as you have new responsibilities or new life events that occur in your life. Now, once you establish your own personal goals, then it's time to examine where your finances currently are. So you typically do this by assessing your net worth. And stated simply, that is your assets minus your liabilities. And your assets are what you own. So on the screen, you can see there's a couple of different scenarios here where, most of us might probably have, right? A bank account, retirement account, a house, vehicle, anything that's yours is part of that asset calculation. Liabilities, on the other hand, are everything you owe. So do you have any debt? Is there something that you own that you actually owe to someone, right? Anything that's carrying a balance, you would add there. And when you do this calculation, the greater your net worth, the better is your financial health. So in general, we tend to not really look at this too often. Many people don't do this calculation, but it's actually really important to do because you actually can assess your financial health by seeing what the result is. say, for example, you're looking at this annually and you notice maybe it increasing over time, that means you're improving your financial health. So that higher the number, the better. And the thing is, if you're not really sure where to start and you're not entirely, able to do this calculation, we have a calculator that you can plug in those figures and it'll ask you the questions that it needs to so that you can come up with that amount. And it's called the net worth calculator. So after the presentation, feel free to go on the website to do that. Now, the couple I was working with in particular, they had a ton of student debt and credit card debt. So both of them really made a pretty good living. So that wasn't so much of an issue in terms of them feeling drowned in debt per se. They were they're paying their bills on time and things of that nature. But what they were struggling with was more of a structure in terms of paying it over time. And they also were struggling with emergency funds. So that was something we tackled at some point in our conversations. But in order to do that, we also had to determine their cash flow. So when we look at cash flow, it's your income minus your expenses. So everything you earn minus everything you pay, usually on a monthly basis. And the thing is, when we look at this, it's the same thing as a net worth. Over time, you should see a positive cash flow. Now, many people have situations where they have calculated this and they start to notice that they have a lot extra money, but they feel like they don't. And a lot of times you actually put breathing room and wiggle room in your cash flow without even realizing it. And that's a good thing because you don't know when you might have a new goal that you need to save for or an unexpected expense. So having that wiggle room is actually really good. The thing is, we need to incorporate our goals and savings goals into our budget to kind of start to track where every dollar goes. Now, my clients, they had a little bit of a disconnect when it came to their finances. The husband really didn't take too much part in paying bills or like any financial part of that relationship. He was more of an out of sight, out of mind, which many people are. His wife, on the other hand, found herself always worried about finances and thinking maybe there was a possibility that they weren't going to be able to retire at a certain age and things of that nature. So that's where having that conversation was so important for them and communicating with someone about this to create that structure. But at the end of the day, I did bring them, especially for these two topics, to EY Navigate. They did have available the home budget calculator, which is a great place to start, and also the live by a budget goal. And essentially what that does is it helps you plug in all of your accounts and it starts to track your spending on a monthly basis. So that was a great start for them. Now, they were pretty honest with me. They pretty much told me that, they hadn't really looked at their finances for a while as a couple, right? So when we talked about emergency savings, they really didn't have anything that they sought to achieve with that. They pretty much just had a checking account with a lot of money in it, and they were rerouting their contributions for retirement into their 401ks. So we had a long conversation about the importance of an emergency fund because having an emergency fund in the long run can really help you get out of debt unexpectedly. Because, for example, let's say someone had an unexpected accident and all of a sudden high medical bills started to accrue. What if someone lost their job? Or maybe their car broke down or their water heater broke or something like that. If there's no fund to pull this from, you're going to try to find possibly debt in order to achieve this goal now that that's just happened unexpectedly. So this fund can really help prevent you from having to go into debt just to make ends meet, especially if you're not budgeting. So you start by looking at, how much is it that you are spending and trying to just start to accumulate enough savings to cover about 3 to 6 months of necessary living expenses. And I say necessary because sometimes we plug in values that, really we probably could get rid of if there was a big emergency or if you lost your job, you can probably get rid of it. Now, you would keep those funds in a liquid and stable account that allows you to access your cash quickly, easily. So this is a savings account, a money market account, something like that. So this is why it's so important that you try as best as possible to stick to your budget. And I don't mean being so restrictive to a point that you're not happy with what you're spending. You have to allow for some wiggle room. You have to be disciplined, but at the same time, you also have to note that every budget is different and every month is different. It would be impossible for us to track your spending, but it's important to allow for you to look through it and ensure that you're comfortable with the amounts. So for the most part, it's really important also to limit yourself to borrow and put, and start charging things on cards or things of that nature for just the necessities, and actually save for your short-term expenses that might accrue. So if you're going on vacation, things like that, you want to make sure you have a little fund separated for that and plug that into your budget so it makes sense and you don't get yourself into debt. So a great resource is the Prepare for the Unexpected goal on EY Navigate. That does allow for you to calculate how much you actually need in your emergency fund. Now, things happen and some people still need to borrow in order for you to actually, especially pay for an emergency. And if you do need to borrow, it's really important that you know where you stand in terms of your credit, because your credit reports reflect information about you and the use of your credit. So essentially, this information is collected by three major credit bureaus. So that is Equifax, Experian, and TransUnion. And essentially, what they do is they compile a report that just tells them whether or not they would be at risk for doing business with you. And this is used by lenders, landlords, employers, so it can vary depending on your situation. And you're able to, under federal law, actually download a report for yourself, and you can do this from each of the three credit bureaus. So you can go to annualcreditreport.com, and you're able to double check your credit report and see if there's any errors, or if you recognize everything on there. It's really important for you to do that since you have three different places you can do it from. Some people, a good practice is to do it in the beginning of the year, in the middle of the year, and towards the end of the year, because then you get to see if anything stood out at any point in the year instead of just doing all three at one moment. Now, in terms of your credit score, it's a single number that reflects what's in the credit report that you download. And you have lenders basically pulling this to see if you're credit worthy. And many of you may have heard the word FICO score. That's probably the most widely used. And essentially it ranges from 300 to 850. And the higher it is, the better, of course. And the less risky you are in terms of, just in the eyes of the lenders. So the FICO score, on your screen, you'll see that chart. It does get ranked based on different categories and how you actually spend your money and how you are as a customer. So your payment history is the one that mostly impacts it. So many times you might hear, always make your payment on time. That's always a rule of thumb that my mom always said to me. I always try to do that because it does impact your score significantly compared to the rest. And in general, you can see a big drop on your credit score if you miss a payment, along with, of course, getting charged a fee. Now, having auto pay turned on your credit cards, that's always a good practice to make sure that you don't forget to pay anything, especially if this impacts it so greatly. If you really don't know what your credit score is, you can actually take a look by going to creditkarma.com and freecreditscore.com. And essentially what happens with this credit score is that over time, we try to increase that, and these variables will help with that. So if you are, let's say, in the process of making a big purchase, like a house or a car, you want to make sure that that credit score has been ramped up in a way that makes you a positive customer for these lenders. Now, luckily for my clients, they always made their payments on time. They really didn't have that issue. They had debt, but they didn't have the issue of not making their payments on time. And they actually had a pretty decent score after they took a look at that. But in general, we still needed to focus on another aspect when it came to their situation, because essentially we wanted to talk about their budgeting and their saving strategy and other aspects because of all these new things that they wanted to happen, especially having a child. So no matter the age, the earlier you save, the better it is for you. And that was so important for them as well. If we take a look at this chart here, a monthly savings of $250 with an annual return of 7% is assumed here. And essentially what we can see here is the effects of compounding interest or compounding returns. The 55-year-old is here saving for 10 years because we're looking at the balance at the age of 65. Whereas you have someone on the right side that started at 25 and is able to compound returns for 40 years. So the outcome is going to be completely different. So if you're able to save anything at any point and invest it, it's always a good idea to start. Now, it doesn't necessarily mean that you're going to always contribute the same amount to an investment or anything like that. Over time, your budget changes and you're able to reassess how much it is that you should be contributing. And our EY planners are here to help you with that. Now, the clients I had really weren't investing outside of their employer, and many people don't do that, and that's totally fine. But it's really important that if you aren't already able to contribute more into your retirement plans, or if you haven't even thought about that, that you start to think about the amounts that you're able to put away with your budget. And speaking about retirement, we can take a look here to see that there are two different ways that we look at retirement savings. With PBUCC, you have a 403B option. And when it comes to savings, you're able to maximize your contributions in different ways here. There's a way that you can contribute up to $27,000 into your 403B. Now, someone that's married and their spouse isn't working, they can also have an IRA for that spouse on the right side. And so the values do change, and your own situation might change in terms of of whether or not you even can afford to contribute this amount. But year by year, if you're able to in 1 year to maximize it, we always encourage you to do that, because there are sometimes years that you can't. Now, the IRAs on the right-hand side, there are tax advantages for each of those IRAs. Depending on your own personal situation, it's really important for you to contact a financial planner to determine if it makes sense for you to contribute into that. And my clients, they were only so concerned about retirement planning, but since they were looking to have kids, I knew that that was still something that we needed to tackle at some point, because that added expense was going to impact their retirement savings strategy. Now, the other thing that we talked about is the fact that we needed to discuss what could happen to them and what would happen to their kids, for example, if they were to pass away. So some people don't like to even think about death of anyone. And I would say that's me. Now, although it's a difficult conversation, it is still something that you do need to discuss with your loved ones, make sure that there's a plan in place. And most people have employer coverage when it comes to life insurance, and that's a great place to start. And sometimes that's more than enough for your own personal situation. But sometimes you have other goals that you want to accomplish with life insurance. Some people might not even have life insurance. Maybe half of you watching this presentation may not have it, but it all depends on your own personal situation. I encourage my clients to just have that conversation with each other and start to ask themselves questions like, what would you do if I passed away financially? Who would take care of our kids? What if both of us pass versus one? How would that impact us? So your EY planner can help you determine how much, if you need to change that insurance, what type of insurance is best for you, because there's different types of life insurance. And not only that, but they also needed to determine what would happen to their children and their individual wishes if they were to pass. And estate planning just becomes such an important topic a lot of times, because you should always be in control of determining where your assets go. Who's going to take care of your children, things of that nature. What are your own individual wishes? Now, not all of these are going to be relevant to everyone, maybe some, but in general, for my clients, a will was super important because that determined essentially who their kids were going to have as guardians. So that was huge for them. But in your scenario, just to start, beneficiary designations, you all have a 403B, that is a good place to start for you, right? Specifying who is going to receive any of your accounts is important. And actually, beneficiary designations trump any designations in your will. So let's say, for example, my client had named their spouse as beneficiaries on everything else besides their 401k, and their 401k they named their mom 10 years ago. Then now, if they, God forbid, they passed away, they would then, all those assets would go to their mom, right? Or something like that. It trumps anything in the will. So it's really important to update that as many times as you need to. Now, I encourage you, take a look at your accounts, life insurance policies, checking accounts, brokerage accounts, review them. And another thing is essentially when someone passes away, whoever is in charge of their estate or their executor is basically there to put your financial life back together. Now, that person could be anyone that you need it to be, right? We're not always prepared for it, but that person is going to go to your home, look through your things, every box you own, every drawer you have, and try to figure out what are your passwords, account numbers, who are the plan administrators. And the alternative is to just go to one drawer or one box and pull out just one piece of paper. And that is the document locator. So you'll have maybe a will and a letter of intent to go with it. A letter of intent is there to specify, well, why'd you leave that jewelry box to this person versus that person? Or maybe I want this person to take care of my kids or that person. But it also is going to tell the executor where to find that piece of paper that's probably hiding somewhere with all of your personal information. Now, a lot of these documents, like a trust and things like that, they require you to talk to an estate attorney. So, in terms of that, to draft those documents, they do need to go through that with you. But in terms of going over all of these different things, a financial planner can help you decide what might make sense in your situation. So give us a call. Our phone number is on the screen. It's 877-927-1047. We can plan with you over the phone. And again, we're available from 9 to 8 p.m. And just give us a chat about your situation. They can go over so many different topics with you. So don't feel like you can't ask us a simple question or a complex one. We'll definitely be able to assist with objective financial guidance. And also, if you have any questions on your PBUCC benefits, we have trained planners that can go through that as well. And if you hit it off with someone, you can always call back and ask for them specifically every single time, and you build a relationship with them. And don't forget that you also have your web-based resources available to you on pbucc.eynavigate.com. And there is a nice section on the site on the top that's called Learning Center. You also can go through that area and select life events and different topics, because it does take you to many different calculators and videos that you can go through if you're more of a self-planner and wanted to read up on that on your own for that conversation with your planner. Now, on the top right, you'll have the work with the planner section, and that also is where you can communicate with the planner, as I mentioned before. So before you have that conversation, take a look at your numbers. What do you own? What do you owe? What's your credit score? Have you looked at your budget in a while? Do you know what your balances are on your retirement accounts, or how much you're putting away? What are those goals that you have? Because we reviewed so many different topics today, but knowing those numbers is a really great way for you to just begin that conversation and start thinking about those goals. Are they long-term goals that, maybe are in the next 20 years, or maybe you have something that you wanted to accomplish in the next year or two? And give us a call. Keep that number handy and reach out to us whenever you need assistance. So we hope you found this presentation informative and helpful. And we do have a survey that we are asking for you to text WKSP PBUCC to the 609-644-9622 for you to provide a bit of feedback. And Judith did add in an additional survey option as well for PBUCC directly. So I thank you all for joining today. And if you have any questions, I'd be happy to answer that at this point. Couple minutes for that.
Silvana, there is a comment, question on the chat. It says, Credit Karma gives TransUnion and Equifax info. Do we need to check the third credit report also?
Yeah, so Credit Karma should pull, if you register on the website, and I haven't logged into that one in a little bit. When you first register, it'll start to ask personal information about yourself, and it'll go through some personal questions. But so if you only see the two there, you should be, and at that point you should be able to go through to the third one. So you would essentially go to each individual agency. It tells you which one that you're going with. So it's not like, it's not like automatic where you would essentially go to all three of them at the same time. If you go to Credit Karma, you would pick whichever one you wanted to choose. And if the other one's not there, then you would just go directly to their site. Are these credit reports no cost? It's at no cost to you if you do it from each of them once a year.
Okay, do we have any more questions? Feel free to unmute yourself, ask a question, or place your question in the chat.
You're very welcome, Heather. Hi, Sandy.
Hi, so I'm not sure you answered my question really with Credit Karma. By the way, I love Credit Karma. But when you go on Credit Karma, it gives you the information for TransUnion and Equifax. The question is, I follow that and I know what Equifax, what those two reports say, et cetera, and so forth. The question is, do I need to also check the third one? Do I need, is it important for me to check that third one also?
I would say that it's important. Oh, it looks like you, okay. I would say that it's important for you if you're doing it with the 3 times a year, because if, essentially you get one credit report for each agency, right? So say you are using the free one, right? You technically could contact any of those agencies and get a credit report at any point, but you have to pay for it when it's more than that one time. So say you are using the 3 free ones, you would go to each individual one. And then, let's say you went to Credit Karma to get the first 2, right? One in the beginning and one in the middle of the year. Then the one at the end of the year would be from the other agency, just to make sure that you take advantage of all 3 being.
And is that really important to do, to check all 3 of them?
I would say you don't have to do it. It's not like a requirement. Technically, if you did it twice a year with the 2, right, you can probably hold off to January and then do the next one and do it twice a year. That's fine. But it's not. I wouldn't say it's a requirement or anything like that. I would just say it would be more of a best practice, just to see if there's anything that stood out for you, or anything like that. It's more for you monitoring your own credit.
Thank you.
You're welcome. So we have another question. Can the financial planner help to guide one in creating a budget spreadsheet? I keep an informal system to pay bills on time, yet I don't have a structured cash flow spreadsheet. So financial planner can assist you with breaking up the expenses for you. In terms of creating a mock spreadsheet, there isn't something that we would send out to do that. But on our website, you are able to actually start the goal for you to do your budgeting. And that in itself, once you start to link your accounts, it starts to just do it for you, so that you don't have to do that on a bi-weekly basis or a monthly basis, where you go in and you start to have an Excel spreadsheet spreadsheet to manually do it. So we try to have you do less work, and that's really the intention behind it. So the goal in itself is there to do that for you. But say you wanted to create one and that was something you were more comfortable with and you wanted some tips on that, then we can definitely walk through that with you. And you also can upload any document that you've started, and we can work with you to make sure it makes sense for you, and talk about your budget with you.
Any more questions?
I have one last question.
Sure.
How truly conversant are the EY folks with the UCC pension plan and the process when you transition to annuitizing and all of that, the ins and outs of that process?
Honestly, we have all the information regarding the plans. And even if, let's say, there was an obscure question that we weren't sure about, we have subject matter specialists that we can reach out to get that answer for you. Now, not all questions we can answer, but in terms of the payment options that you have for your benefits and things of that nature, and calculating maybe what might make more sense for your personal financial planning situation, we can help with. And then if there's something else that's more administrative, then we would get you over to the administrators for the assistance on that.
Any other questions? Well, if there are no more questions, we'll wrap up today's session. And Silvana, thank you so much for your time and going over those very important basics for us. Really appreciate all the information that you've provided for us today. Again, please, I encourage you all to fill out the evaluation forms. It'll help inform us and help present more educational topics in the future. So please take both the surveys, and they're quick surveys, but please do take them so that we could service your needs to the best of our ability. So thank you all for joining us. We look forward to seeing you again next month. I believe the next Power Up Your Finances is on August 17th. So save the date, August 17th at 3 p.m.
Thank you all. Have a great rest of your day.
Thank you, everyone. Have a good afternoon.